Welcome back to Trading Hour. Well, in the last half hour of the session, the market breadth has considerably weakened. The Nifty small cap index is now down over 2%. And one particular stock that continues to remain in focus, one that's been in focus over the last 2 weeks, has been Kalyan Jewellers. The stock now near the day's lowest point is down 6%. And in fact, from just the recent peak in the last 2 weeks, this particular stock has lost more than 40% in trade. So significant selling pressure is what Kalyan Jewellers is witnessing. The other set of stocks that are seeing quite a bit of selling pressure today is the Nifty Realty Index. The Realty Index, one of the top laggards in trade, and along with that, quite a few of the constituents of the index, Prestige Estates, Lodha, Oberoi Realty, all of these stocks continue to see selling pressure today, down in the range of 4 to 6%. But moving on, we are now shifting focus to South Indian Bank's quarterly earnings. The company saw weak deposit growth in Q3, while net interest margin contracted. The asset quality actually improved. To discuss more on this, PR Seshadri, MD and CEO of South Indian Bank, joins us now. Mr. Seshadri, first of all, thank you so much for joining us. Q3, how exactly did it pan out? Deposit growth slightly muted, but how has Q4 started and what is the outlook as far as FY26 is concerned?
At the outset, thank you very much for having me on this show. We are very, very pleased with our Q3, actually. Across almost every parameter, we've shown positive traction. We hit our highest ever historical profit for a quarter, this quarter. Provision coverages increased. Delinquency numbers reduced. So for a bank, I think across almost every parameter, the numbers were positive. The deposits, what you were talking about, we consciously took a call to actually reduce our bulk deposits. So if you were to excise or exclude the impact of the reduction in bulk deposits, you'll find that our deposits grew almost 8%. So, our aim is to ensure that our cost of deposits continue to remain the best in the category. If you were to look at our investor presentation, you'll find that we are significantly lower priced when it comes to cost of deposits than our competitors. And that is a competitive advantage that we want to keep. And therefore, we have decided to actually focus on retail deposits as opposed to bulk deposits. And that's the reason why you see muted growth in deposits.
And to garner retail deposits, are you going to get aggressive? What is the guidance on deposit growth and advances growth as you will end this year in 3 months?
With respect to retail deposits, what we're working on is redoubling on our NRI franchise. Approximately 30% of our deposits come from non-resident Indians. We continue to focus on that, and we are trying to build more linkages with our customers overseas. That's a great area of focus. The other area of focus is to ensure that our branches and our RMs in particular ensure that they are in close contact with our customers. We are not thinking of growing our branch footprint very aggressively at this point in time, merely ensuring that we stay in contact and ensure that we have the best products. We're also trying to see what we can do for corporates. We do have a large corporate book. Our corporate deposit franchise is not as large as we would like. That's an area of another focus. We think that we can grow deposits at between 8 and 10% annually, and we can grow our assets at between, in the early teens.
Okay, so you're looking at an early teen growth as far as assets is concerned. So Q4, FY24, could you help us with the following numbers? Advances, what is it that you're penciling in? Deposits, what is it that you will end FY25 at? And what is it that you're targeting for FY26? And where will you maintain NIMs at?
With respect to growth during the fourth quarter, we are trying to cycle out of some of our lower yielding assets and into slightly higher yielding assets. Consequently, the fourth quarter may see a slight drop in growth on the asset front, but this is to ensure that we can, manage our NIMs a little bit more actively. There is pressure on the NIMs on account of the fact that deposit costs are rising, in spite of the fact that deposit costs for us are lower than our peers. But still, there is this pressure and consequently the need to manage this balance sheet actively. So we do see NIMs dropping a touch in the fourth quarter, and they will then sequentially improve as we go into the following quarters in the next year.
Would you like to put a number to it? You said that as you cycle out, get out of some of these low-yielding assets, growth will get impacted in Q4 and margins. So what's the growth that we're looking at on advances, and what could the NIM level be?
So the growth in the fourth quarter would probably be in the 10-11% range. And thereafter, in the following year, we'll go back into early teens. The reason is that in order to ensure that deposit costs are kept reasonable, we need to grow at a rate where we don't have to offer the highest rates to attract deposits. And consequently, that puts a limit on low-cost growth of deposits. And that happens to be approximately, historically, we've grown about 10% a year when it comes to deposits at the lower cost that we have. And that's what we intend to keep on in the next year. And as we cycle out of the lower yielding assets and get more higher yielding assets, that's when we'll start competing more aggressively for the deposits. We do think that we have a very solid franchise on the deposit front. And we think that if we were to start offering higher prices, we should be in a position to attract greater deposits, which we will need once we start growing faster.
Okay. Mr. Seshadri, where do you intend to maintain your credit deposit ratio or your loan deposit ratio? And also give us a sense of how exactly asset quality is actually panning out. On ground, how is collection efficiency? Do you expect to see further slippages, or are you hopeful that there could be a few recoveries that could be made?
Our credit deposit ratio right now is at about 82.5. We used to be in the late 70s for a long time. We're now at 82.5. We expect to stay in this neighborhood in the near term, which means that we will need deposits to grow our assets. From the perspective of how assets are behaving, across the board, we are seeing improvement. And the reason that we are seeing improvement is that our exposure to unsecured credit as well as microfinance is very limited. And consequently, we are not impacted by these two areas where there seems to be stress in the marketplace. And we think that the improvement that we are seeing on our credit ratios will continue as we go forward.
We'll leave the conversation here for now. Thank you very much for joining in. That's the outlook from South Indian Bank. In Q4, growth could be slightly lower, but on the whole, over the medium term, they are gunning for 8 to 10% deposit growth and advances growth in early teens, though Q4 could see a little bit of a drop, 10 to 11%. Mitesh is now with us for a quick technical check on the markets. Mitesh, the sell-off in the broader markets is brutal. What does that tell you?
Yeah. So I think, the fact that the mid-cap is underperforming is nothing new. I think broadly, barring a few days of bounce back, we've seen the mid-cap and the breadth kind of underperform. But what is more important is the bank nifty. I think, the bank nifty is still showing signs of weakness, and 48,400, 48,375 is in marked area pivot support. But in case we start breaking below that, I would expect levels of 47,500 as well, and maybe lower levels as well. So I'm watching the bank nifty closely. I think that could be a pressure point in case we don't rebound in the next few hours. Having said that, on the stock side, I have a sell on National Aluminum with a stop at 203. Look for targets of around 190. And Muthoot Finance is on the buying side. Keep a stop below 2150. Look for targets of 2235.
Thank you so much, Mitesh, for joining us, giving us a sense of what is it that you anticipate as far as indices are concerned, as well as your stock-specific calls. Time now for a short break. We'll get him on the markets on the other side.